All right, everybody, welcome back to the channel. It's Millennial Trades. It's January 11th, 2022. Markets are up. We've got the NASDAQ and the SPY up well over 1%. Whether or not these markets are getting ahead of themselves or not, or kind of running up prior to the CPI numbers that come out tomorrow, we're going to have to watch and see. One can only speculate. I'm actually not speculating overnight. I'm going to wait and see what happens tomorrow. You know, we are going to get some moves most likely during pre-market. But a couple of the stocks, I mean, Amazon, for instance, that would have been the stock to trade the last couple of days if you were bullish. And I'm sure some people have made money on that. Amazon today made like a $5 move the last couple of days. It's gone from about a little under 85 all the way up to $95. Tomorrow, Amazon will probably open up near its next supply zone, but some of these supply zones are just they're not holding up. The sellers have either disappeared or ran out, or the buyers are just overwhelming the sellers. The fintech stocks, we had SoFi had a pretty good day the last couple of days. The other fintech, Square and PayPal, just sort of chopping around near the highs, kind of slowly moving up. But again, nothing I wanted to put any money on overnight. With SoFi, actually, January 30th is going to be a big day for SoFi because we're getting their annual reports, their annual figures, their annual numbers. They're still likely losing money, but growing rapidly is what we're being told. So, yeah, I mean, obviously the CPI coming out tomorrow, bank earnings on Friday. Also, I think, you know, along with all the optimism from those two events, probably China reopening is bolstering these global markets. China and Europe, I think, in the overnight session did pretty well, kind of following with the American markets. Commodities real quick. Let's talk about copper. Copper hits an 8-month high. Over 4.1. Let me see where it's at right now. It was over 4.1 this morning when I took these 4.16. All right, so both Glencore and Trafigura are warning about short global inventories. You know, when it comes to copper, you know, these Chile, I think, is the main copper exporter. Producer, and they said their copper production will be down by 6% in 2023. Crude oil above 75. We're now at 77.83. Crude oil had almost a 4% gain today. You know, does that have something to do with China reopening? Maybe demand optimism. There's a lot of demand pessimism when it comes to Europe, maybe even the United States. But we talked about, I think in yesterday's video, Pierre Auderon, the French hedge fund manager, is basically saying that everybody is underestimating the China demand factor when it comes to oil. So he's calling for $1.40 plus barrel oil. So oil kind of, you know, earlier today at least, it was pinned between the fears of an oil demand slowdown and also the optimism of an oil demand growth fueled by China. But now it looks like it's all optimism. I mean, a 4% gain in the oil markets, not bad at all. Brent well above 80 now. We're at 83.10. OPEC is going to stick to its policy of restricting global supplies by 2 million barrels per day. That news came out as well, so perhaps that's helping. Let's go ahead and talk about bonds and mortgages, because some of this mortgage information kind of made me a little bit more pessimistic when it came to thinking about the interest rates, thinking about maybe the market's reaction, you know, thinking about the interest rates coming up in February. U.S. mortgage applications increased 1.2% in the first week of January, but that was following a over 10% decline in the last week of December, which kind of makes sense. I mean, you know, it's the holiday season. Maybe a lot of people simply weren't applying for loans. But apps to refinance were up 5.1%. Okay. We also had mortgage rates down 16 basis points from about 6.6 to 6.42. And you had a mortgage, economist basically saying that, his name is Joel Kahn, saying that, quote, mortgage rates declined last week as markets reacted to data showing weakening economy, slowing wage growth, and all the loans saw rate declines. But when you think about these, basis points, the basis point moves, and especially when we get into the bonds here, it's just something that I kind of pay attention to. For instance, the German 10-year bond, or Bund, I think it's called, down from its 11-year high of 2.6 in December to 2.2. Now that's a 40 basis point move on that bond in just a couple of weeks. And we know the moves on these yields have been the past year unprecedented, not just in Germany, but all over the world, here in the United States. You have preliminary CPI numbers for the euro showing that inflation is falling more than expected in December to 9.2%, returning to single digits for the first time since August. You also had in the last year, in 2022, you had the Bund yield rising 3 full percentage points, and that was the biggest annual rise since the 1950s. And of course, this is just the German bond here, but a lot of times these things seem to be correlated. The way the bonds are moving in other parts of the world seem to at least be correlated sometimes with the way the bonds are moving here in the U.S. You had this other guy, Jeffrey Gunlach of Doubletree Capital, saying, pay attention to the bonds. Don't pay attention to what the Fed says. Pay attention to the bonds. A lot of people speculate that the Fed is involved in buying all this debt, because who else would buy it? And, how rigged is the bond game? Can we really trust can we trust economic information if we're going to be reading bonds or bond yields or the way that they move? Can we really trust that that's any reflection on the state of the economy? I would probably be a little hesitant to just jump into that line of thinking. But that's what Jeffrey Gunlock of Double Line Capital says. I got the sniffles today. I don't know why. Kashkari, Neil Kashkari. This was in the same article here. I'm going to link this article down below for sure. Trust the bond market, not the Fed, on interest rates. Gunlock says. Gunlock? These names sometimes. But Neil Kashkari, he's the Minneapolis Fed president a couple of years ago that said there's an unlimited amount of cash at the Fed. You guys remember that famous clip? He had those real wide, sociopathic eyes going on, telling the American people, don't get cash. Don't go to the bank. Your cash is safe. There's an unlimited amount of cash at the Fed. Well, if there's an unlimited amount of cash at the Federal Reserve, why don't you want people going to the bank and getting cash? Why are you campaigning against that if there's truly an unlimited amount of capital or cash at the Federal Reserve? But he says that Wall Street is culturally and strategically too optimistic. And he said that Wall Street will lose this game of chicken. So what is he hinting at here? Is he hinting at that there's way too much optimism in the stock market right now? I would tend to believe that Wall Street knows exactly what the Fed is going to do because we know that they talk. We know that it's a revolving door. People work on Wall Street, they work at the banks, then they go work at the Treasury, then they go work at the Fed, then they go back to the Treasury, then they go back to the banks. This is the revolving door up at the top, at these firms and government agencies. It's all laid out, too, in Andrew Ross Sorkin's book, Too Big to Fail. So I don't know if maybe Neil Kashkari is kind of playing like a bad cop, good cop against Wall Street here, but I think the real, the people who are really going to fail is going to be the American consumer, with the consumer debt exploding. It's, trying to actually make sense of what these people are talking about and reading through all of their lies and their propaganda. It's a difficult task. It's a task that, we have to undertake, but it's a difficult one. And I see these kind of statements. In fact, here's another statement from Jamie Dimon at JP Morgan. He lambasted Bitcoin as a decentralized Ponzi scheme. Well, what is the Federal Reserve? What are the commercial banks? Centralized Ponzi schemes? You take your pick. But and I'm not trying to hate on Jamie Dimon too much over here today, but he actually said in 2017, famously said that any one of his JP Morgan traders caught trading Bitcoin would be fired. Is JP Morgan really not involved in the Bitcoin bubble? Were they not involved at all in the Bitcoin bubble? Did they not finance the Bitcoin bubble? The not just the Bitcoin bubble, the cryptocurrency bubble in general? We'd have to look into this kind of thing. But Jamie Dimon's been calling Bitcoin a scam. He's been calling cryptocurrencies pet rocks, and I tend to agree with him. We know cryptocurrency in some form or fashion is a scam to a certain extent. We don't have to look far into recent history to know why. But I don't know. It's almost as if some of these banks are protesting a little bit too much, or the Fed, like Neil Kashkari, protesting a little bit too much. I don't think the banks or the Fed are in the business of, or the the elite crypto traders, whoever they may be. I don't think they're in the business of really screwing each other over. Who they're going to screw over is the American consumer, the global consumer. They're going to, this is what the Roman Empire did, relocating people to different parts within the Roman Empire to confuse not only the local population, but also confuse the new population coming in. These are techniques that are being used right now. And we had this big globalist event. Remember, we talked about the symposium in Sweden, the banking symposium, where all the Fed ghouls were speaking. Well, last night, I think this was in Canada, you had the U.S., Canada, and Mexico meeting basically to talk about the new agenda, talk about the coming economic bloc is how I like to refer to it as. They think human migration, they think it's a human right. They think you should just be able to storm borders and there's nothing the local population should be able to do about it, right? Because it's a human right to be able to, move massive amounts of people into other countries. This was one of the main talking points from yesterday's meeting between these three global powers. They also talk about the continental cooperation, the continental economy, building, actually it was Trudeau who referred to our combined GDP, with Canada, US, and Mexico, our combined GDP is greater than that of the Eurozone. Well, yeah, no shit, because the United States is on this side of the pond. So it's not like Canada or Mexico are contributing significantly to this combined GDP. We've got tapeworms on both sides of the country here, on the north and southern side, and they're going to suck us for all we're worth. So it should just, be aware of that. Don't get angry about it, obviously, but, be aware of what they're talking about, why they're talking about it. To me, it's and also the green revolution too, the green transition. That was a huge talking point in this meeting between Biden, Trudeau, and I don't even know the Mexican president's name. You had Biden speaking in English, Trudeau speaking in French, the Mexican president speaking in Spanish. Yet we are a combined GDP. We're an emerging bloc, right? I don't know how else to refer to it. They may not use that specific language, but that's where this is headed with the trade agreements, the migration pacts, all of this stuff. How much longer before they start suggesting that we should share currencies with Canada and Mexico? So yeah, you have all that going on. Mohammed El-Erian, he's a Cambridge professor and economist. He says that investors should dump stocks and long-term bonds and move into short-term fixed income and cash. Now, I like that idea of moving into cash, but now it's kind of getting kind of late in the game where it's like you start moving into cash now. You're already down 80% in crypto, 80% on Tesla or whatever it is these people are holding. To go into cash now, it's kind of like, well, what's the point? You may as well see if some of this stuff turns around in the next couple of years. But you have economists like Etherium telling investors to move into short-term fixed income. His suggestions are the Vanguard short-term bond ETFs, the SPDR, I guess the Spiders portfolio short-term corporate bond ETFs, and then the Western Asset short-term duration income ETF. I don't know if I'm ready to move my money into bond ETFs, but that's what some elite economists are telling us here. And the last thing I'll wrap up with is the currency markets kind of calm ahead of the CPI data this morning. We need confirmation that inflation is retreating, that inflation is cooling, it's coming down. And also, you have the pound really just taking a beating against not just the dollar, the euro as well. The UK is in for a world of trouble if that currency can't, if they can't get some investors. And who knows who's shorting the pound for political reasons, right? We know George Soros made a lot of money shorting different currencies, but not just shorting the currencies because he wanted to make money. Shorting them because when you short a currency, when you cause a currency collapse, you can implement alternative political agendas more easily into that country because there's because of the currency collapse that causes so much social instability and political instability. So I think this is something of what's going on, especially when it comes to the pound. But don't think, on this side of the pond that we couldn't experience that as well. I mean, the dollar is cratered from its highs. I'm not convinced the dollar is going to collapse this year like Peter Schiff keeps calling for. But, the dollar's still showing a lot of weakness. I was looking at the DXY today, and, it's just weak. We can't really get above that 1.340 level, 1.350 level. I'm just looking at the markets here. SPY looks good. NASDAQ looks good. But, who knows what this report's going to show tomorrow. It wouldn't surprise me if inflation comes in, not quite as cool as it should for the markets and everything collapses. I'm open to everything. I do think maybe the markets are getting a little ahead of themselves here, but I don't want to be the perma bear. A lot of people are bullish. A lot of people are in these long trades, and I wish you well on them. Last thing I guess I'll wrap up with, we did manage to scalp 175 today. It was about 200 with the, or maybe like 290 with the, minus the option trading, minus the option trading fees. If you add the option trading fees in there, it was about 175 exactly, which is what I scalped. Again, humbling, right? These, smaller trades, the smaller gains. I mean, 175, that's not small for, having a $3,000 account. It was almost a 5% gain in the account. But we're getting closer to 4,000 now. It's taken us almost a week to make, $600 or $700. So we'll see how tomorrow goes. We'll see how Friday goes. But just trying to be patient and trying to, accept it, right? Be humble and accept it, because this is the place that I need to be in right now. Because I was getting a little ahead of myself, I think, right at the start of the year, right before the start of the year, and with that last trade last week that went horribly wrong, right? I mean, not that the trade went wrong, my reaction to the trade went wrong, and my emotions got the best of me, and it happens. So I'm going to leave it there, guys. You let me know what you think in the comments section down below. What do you think of this Fed Goul news with Neil Kashkari saying that Wallstreet won't win this game of chicken? How do you take those words? Leave your thoughts in the comment section down below. Give the video a like. Follow me on Instagram at Millennial Trades. And as always, until next time, I'll see you on the next video.